Alright, I'm going to do a quick trade review of TSLA from Friday, September 28th. It was in play due to them pricing their secondary offering. We get the news off of the scanner in the pre-market. Just type in the symbol. So we, it's normally, oh, this is good, and it's actually showing the volume that it did in the pre-market here. So it's 1.3 million shares it normally trades. 80,000 shares in the pre-market, and the pricing was at 28 and a quarter. And what normally happens, and by the way, they reported about 5 days ago in a gap down here to 26. They announced that they were going to do a secondary. Many times when a secondary is priced, and people know where the institutions are getting in and how much money is being raised, buyers will step in and bid the stock higher. In this case, you can see the line right here that I drew at 28 and a quarter was where the deal was priced. So that's that level. 29 I drew here because on the day that they released earnings, it attempted a gap fill and it went up very strongly right on the open, but failed to hold above $29 a share. So I wanted to use that as kind of my mental spot. If it actually consolidated above this level, I would look for it to go to my next two targets, one being 29.70, which was support the 2 days before it reported earnings, and $30 a share, the natural whole number divisible by 10. So those were the two targets, and the entry was if it was holding above $29 a share. And you can see when it gapped down initially on earnings, there were plenty of buyers who stepped in and wanted to buy the stock as well, and so that was on my mind. They bought it up. It rallied over 3 points initially, pulled back to 27.5, but held it the following day and was accumulated a little bit more. So it was looking good for a possible gap fill here, and the catalyst was the pricing of the offering. If we look at it on the 2-day, you can see that the stock opened above the secondary price, right around 29, and basically for the first hour was above and below. And where I got involved was once it got steady right above the 29 level here, I threw in a bid right around here at 29.02, got hit, and started to move higher. I noticed initially when it started going up that it had some trouble at 29.20, so when it broke through there, I placed bids right in front of the level. We know that resistance becomes support, and I got hit right here for some more shares. I tripled up. And for those extra shares, I had about a 10-cent stop on those, and my original shares, my stop was below 28.80, which was the opening low. When it started to move higher here, up to 29.5, and couldn't hold above here, I sold about half of the extra shares that I bought, but bought those back again when it came back down to 29.20, and actually bought some extra. It came back up to 29.5 again. Couldn't get through, had some trouble, so I sold some shares to lighten up, and had my stop for some below 29.15, and for the rest still the original buys below 28.80. Started to move higher, reached my target of 29.70, got out of about half the position I believe up here in the 70s, got almost to my target of $30 a share. I could not get a sale up here. I was up at 29.90. Stopped at 89 cents. Couldn't get any sales there when it started to come back down. Took off a little bit, and then I placed my stop excuse me, below 50 cents and below 40 cents, and was stopped out of some here, and then eventually stopped out. I'm not sure. I actually think I got stopped out here. I don't know if there was a bad late print or something like that, but I think on this wick down I was actually off the desk. I think I got flat here, but it did break this uptrend regardless. Got an interesting review from one of the newer traders who was in the stock yesterday. I was actually thinking about writing a blog post, and he breaks it down with the chart and kind of shows where he got in and how he traded it. The main difference, we got in at the exact same spot. He got in, he noticed it was holding above 29 as well. But what he did was the difference, and I wrote a blog about this a couple of years ago, why inexperienced traders do not hold their winners. There's a bunch of reasons, both internal, psychological, external things that they're actually seeing on the tape in the market. and you can do a search for that on our blog post. But basically, the way he traded it was he got in here, and he sold, I think, one lot around here, above 29.20, which is actually, when it broke through there, I was thinking of how to add to the position. And I don't remember where he got flat, but it was, I think, somewhere in this area right here. And he fretted about the fact that he wasn't able to add to his position. But there was, twice I was able to add here. It broke through. Basically, it showed the strength. And sometimes it's tough. Like when you have this open P&L and you have this open profit, for less experienced traders to press. And when you crunch the numbers at the end of the month, the reason or the way that you actually make money is when you're actually right, crushing those situations. And so when I talk to traders that I'm mentoring and less experienced traders, I don't really emphasize the times that they lose money so much, because we all lose money on trades every single day. It's really, did you make the money when you were right? And if you're not making money when you're right, and if you're not pressing your winners, the numbers just don't add up at the end of the month. So yes, keep your losers small, and keep your losses tight and things like that. Yes, of course, that's part of the equation, but actually the much more important part of the equation in terms of long-term having success and making money is pressing your winners and understanding. One of the easiest things to do on an intraday, from an intraday trading perspective, is when you find levels that stocks are having trouble getting above, when they pull back to those levels, that's where you add to your position with tight stops. And if the stock actually trends like this one did, you can turn something that you initially, you were risking, let's say $100, into a $500 winner or a $1,000 winner, because you're able to add to the position and build it up at good points. But overall, there's not a lot to this trade, and that's it.